Perfect. Okay, so it's a little tiny, but we'll make it through. Okay, so this is where we left off last night. We finished our subcontractor expense, right? We hired LV Remodeling, and they sent us a bill to remodel our store for $18.90. Okay, now this is exactly where we left off. Is that we decided to hire Irene Jameson for the in-store help. Okay. She's gonna get paid $8.50. Is that right? $8.50. Not bad. And let me see. She has no extra benefits. Okay, that means because I'm such a small store, I absolutely cannot provide her with any other benefits. Not even her own health care plan or anything. She is going to work 40 hours per week, meaning she is full time. And she's going to work from Fridays to Tuesdays. Okay? And then she's going to start working on the 14th of June. Okay? And payroll period is bi-weekly. So if we go ahead and take a look at our calendar, for the ones who have the Excel sheet, I have the calendar on there. It's just a quick overview of when payroll is going to be. So payroll is actually going to start on the 14th of June. Good morning. Okay.
Good morning, Lynn.
All right. So going back to my screen, when we hired Jamie, she's actually going to start on that Friday, right? Because her working hours are Friday to Tuesday. So here our first payroll ends is going to be, or when we pay our people is going to be on June 14. Okay? So by us looking at our calendar here, we know that we have we're going to start our payroll starting on that following Monday, which is going to be the 18th. Okay, and we'll take a look at how many hours she got to do and XYZ. But here we hired her with no extra benefits. So the first thing I'm going to do is I'm going to go ahead and go to my payroll sheet, which is going to be on my on my subsidiary ledger. Okay, and instead of looking at my customers or vendors, I'm going to go ahead and look into my employees. So here I should have a table. It's just a way that I think this is the best way to keep track of your employees, but also this isn't a timesheet, so you want to be careful. We don't care for their timesheets because we're not keeping track of them. They have to be keeping track of themselves. All we're responsible is just to process the payroll. So here, pay date, okay? So if June 14 is the start of our payroll period, when is the next payroll period going to be? Okay, yes, it's going to be on the 28th, right? Every 2 weeks because it's bi-weekly. So that means on June 28th, we're expected to pay for her very first paycheck. Okay? Employee's first name is Irene. And her last name is Jameson. pay rate was $8.50. And that is all I should put in here as far as filling out this form. When payday or payroll usually happens, maybe like a couple days before, but we'll do it on that very Friday, just so that you can see how much it takes to do payroll. Okay, we're gonna total up her total hours that she's done to get our gross earnings. And then by looking through at this, when we do actually start doing our calculations, we're going to automatically take out Social Security and Medicare and her federal tax withholdings. So this is where we get to look at the table, which I've also included in the payroll section. It's also here in the Circular E. This is the 2021 for single people, people bi-weekly, and here's what the table should look like. So I provided everything for you so that you don't have to look through too much. But when we're looking through here, that's where we're going to calculate what our FITW is going to be, and we're going to also calculate our Social Security and Medicare, and then we're going to get our section right here of how much it's going to cost us to pay for the taxes for having Irene as a worker. Okay, so this table just makes it easier to calculate and just makes yourself a little more organized. Okay, so we just filled out our first section. We're saying that, well, the first payroll period is going to be for Irene is going to be on the 28th because she just missed the 14th, and on top of that, she doesn't start work until the 14th. So with that being said, we're complete with Irene. Okay. All right. What has happened next?
We hired Albert Allen as a sales representative on a commission basis of 10%. Commission basis 10% based from the sales.
Okay.
Benefits will be deducted from commission checks. Work to start on the 17th of June, and pay date is same as the payroll period.
Okay, so we hired a 1099 worker. Okay, meaning we don't have to pay for anything for him because this person is just commission based. We don't pay for their Social Security or for their Medicare because they're an independent contractor. All we are doing is we're just having him come in, help us sell the coffee, and by him being a 1099 worker, that means his paycheck is going to be for the full amount that it earns. And with this amount right here, that means we don't charge, because he's a 1099 worker, we don't charge him FITW, we don't charge him for any other benefits. And even if we did, it comes right out of his commissions checks. So with that being said, if we don't have any benefits for Irene, then we're not going to have any benefits for Mr. Albert. And here he's getting a 10% profits from every sale that he has made. Okay? And he's going to start on the 17th of June. So with that being said, we're going to go back to our subsidiary ledger, right? Instead of employees, we should have one more little section called commissions. Okay? And with this commissions, right, we want to entail like every sale that he makes because ultimately, even though he's in charge of his own sales, what we should do is because we are journalizing these sales, we should also be on top of him so he doesn't start putting in sales that don't exist. So we're going to help him keep track of all of his sales. And we're also going to calculate for him how much commissions we actually are supposed to give him. So in this case, right, we have Albert Allen. We know that we're going to give him 10% of all sales. So for right now, that is all you need to do. Okay. We just fill in his name, and when we first make our first sales, and I'll tell you, I'll determine what it is. So Albert is a sales representative. He's gonna be in charge of any sales that are outside the store. So anything that has to do with our customers that are beyond our doors, where Irene is going to be the person that takes care of the cash register on the in-store. So that's exactly what our employees are going to be looking like. Okay. And we're done with filling out that paperwork for Mr. Albert. Okay. And then what has happened next? It's a new day.
On June 12th, you paid for $85 for a quarter-page newspaper ad to run from June 15th to June 20th in the Las Vegas RJ.
Okay.
You paid paid with business credit card.
Ooh, so this is our very first transaction where we're using a business credit card. Now, let's go ahead and take a look in our chart of accounts on what exactly that account's going to look like. Or I'm sorry, or what account are we going to be using if we're starting to use our first business credit card? So we're going to look at our liabilities, and can you tell me what it is? 22,000 for the Visa payable. Okay. And because we are purchasing advertising, this is our first time looking into advertising expense. So, with that being said, let's go ahead and journalize this transaction here. So, on June 12th, we have advertising expense. Okay. Advertising expense. Okay. What number is that? 60,000. 60,000. And it's for $85. Okay. And because this is our first time using our Visa payable, we're going to type in Visa payable. 22,000. And it's going to be credited for $85 because now by us tapping into our credit card, we're going to owe more money. Okay. And then for the description here, I'm going to go ahead and place what was it? Las Vegas LV register journal, comma. We also want to put a little detail. So here, what do we get? Half a page newspaper article.
1/4.
1/4. Okay, newspaper ad. Okay. So now my journal is complete. So let's go ahead and go to the ledger. All right. So first thing that I've incurred was an operating expense. Okay. It should be the very first thing on your operating expenses. I believe, I want to say this is page 34 in your workbook. I mean, in the sheets. So 612, right? Any other details you could also write here, same thing. 1/4 newspaper ad. And you could also write here that you paid with a Visa. Okay. So post reference is going to be General Journal number 4. Because that we just started a brand new page. So we're on General Journal number 4. Okay. And because it was an expense, we debit it for 85. I'm sorry, what was that? I can barely hear anything, but I caught you're trying to find the sheet. Um, Cost of goods sold. Okay, right here, advertising expense is on page 34. Okay, and yes. Okay. So now that we're going to update our ledger, right? Our very first transaction here was my advertising expense. So I've completed it here. Now I'm going to go ahead and go into my liabilities. And I'm going to skip my accounts payable and go right to Visa payable. Okay. Here, June 12th. And we bought newspaper advertising. All right, General Journal number 4. And we're going to credit our account for $85. Since that is exactly what we charged our credit card for. Right? And because this is our very first running balance here, we're going to start off with 85. Lastly, we got to go to our subsidiary ledger, okay, because we're dealing with a vendor. And we're going to go ahead and find that LV journal. So here it is, Las Vegas RJ. So here I'm going to go ahead and write that I purchased, right? I purchased 1/4 newspaper ad. Okay, and I paid with the Visa credit card. Okay. General Journal number 4 again. Post reference is going to be my General Journal 4. Was there an invoice number? Okay, not that we're aware of. So therefore, no terms are given. Obviously, we're dealing with advertising, right? They normally don't give us discounts. So our bill amount was for $85, and we also made the payment for it. So therefore, we owe $0. Okay. Subtract any returns, subtract any discounts, and subtract any payments. So therefore, on my Visa Pay, on my RJ, right? We know that we owe them absolutely nothing as of right now. They owe us service. However, this is our way of keeping track of the bill that we paid or the expense that we paid, right? Making sure that they actually do complete this job by running the ad in the newspaper. Okay? So, what happened next?
Ordered 2,000 advertising flyers at 5 cents each from city printers, and you put
Oh.
something down and paid. Okay, city printers 50% down,
Uh,
paid $50 with credit card.
Okay. So again, we bought more advertising, right? So what we're doing is we're purchasing flyers, right? And it's going to cost us 5 cents for each flyer. And we ordered a total of 2,000 flyers. So in this case, this place requires to give a 50% down payment. So with that being said, we decided to pay that 50% down payment with our credit card. Okay, so in this case, I'm going to go ahead and journalize the date. And we're going to also recognize a prepaid account because we are making a down payment or we're making a small deposit. Okay. So prepaid accounts, because we're making an advance payment or we are also making a down payment, we'll just call it that way, and we charged our Visa credit card. Okay. So prepaid accounts, can someone tell me what that is? 18,600, and my Visa credit card should be 22,000. Okay. And let's go ahead and figure it out. They want a 50% down payment. So how much am I actually going to be paying? $50. Okay, so we're going, 50, not 500. So $50. So that means our total bill that we should be expected to see is going to be $100. Okay, and we made an advance payment. So with that, and we paid with a credit card. So I'm going to go ahead and indicate it here in my journal that my vendor is going to be City Printers. It's also going to be for the 2,000 flyers. And it's also going that we also have to indicate that we made a 50% down payment. Now I'm going to go to my ledger. And I'm going to go ahead and update this piece of information. So we haven't received the bill yet. So therefore we're not going to charge advertising expense yet, because we're supposed to pick up the rest of the flyers, and we're going to charge the rest of the amount later. So when we actually go pick up the flyers, that's when we're going to actually look at our bill. Okay. So here we're going to be on the ledger. We're going to go, so first thing that we're going to be looking at is going to be our prepaid accounts, which should be right above my deposits, which should be on page 15. Okay. So page 15, let me see, payroll expense. Here, so prepaid accounts is going to be on page 15. So this is where we are. And so we're going to go ahead and type in what our prepaid was for this transaction here. So here we're going to write June 12th. Okay. So what this prepaid is going to be is for advertising. And I'm also going to put in 50% down payment. Okay. General journal number 4. And I'm increasing my accounts. I'm increasing my prepaid accounts by $50 on the debit side. So here, I'm going to place it here. So that means, therefore, with my calculation, I should be now at $6,704.17. Okay. And then I'm going to move on to my liabilities, going back to my Visa payable, which should be on page 18. So let me go ahead and find it. So here's accounts payable. Here's Visa payable, and it's going to be on page 18. So I'm going to go ahead and fill it out with June 12th. Hold on, I just deactivated my lock number key. All right, so 612. Okay, and here I also made another advertising. And I'm going to go ahead and write general journal number 4. And I increased my debt by $50. So therefore, my formula here is going to go up 1, right? Because that's our current balance. We're going to add any credits and we're going to subtract any debits to get us to a grand total of $135 in our ledger account for my credit card. Right? Okay. Let's see what has happened next. So now we reach here. We received something in our box. So what did we actually receive? So we received an invoice from Atlas Coffee. What happened here?
We received the order, 125 regular coffee and 125 supreme coffee
Okay.
with invoice 315 and with a term of 1%, 15, net 30.
Okay. What else is very important when we are looking at this little piece of information?
If there is a charge for the delivery, shipping,
Where?
on the receipt, and I'm looking in it, I don't see any freight or shipping costs, those things. So it showed only the total cost of the items delivered.
Okay. So if we look forward, the next transaction is going to be
The separate receipt.
the separate freight cost. And this one's going to be COD. Well, before we move on to that, or before we go back to that, let's look at the transaction at hand. Yes.
Lynn, small question. Are we to update this subsidiary ledger on this 50?
Subsidiary ledger? Oh, for the journal? I mean, for the newspaper or for
Yeah.
the advertising?
Yeah.
Yes, we do. Yes, we do. We have to update our subsidiary ledger. You're right. We have to update our city printers. Thank you. So let's take it back real quick and let's place our piece of information in the city printers. So going back to my advertising expense, I'm going to go ahead and find my vendor for city printers. Okay, so city printers is going to be here, city printers. So on June 12th, I'm going to write that we bought 2,000 flyers, 50% down payment. And we use the Visa credit card to pay. Okay. So with that being said, we're going to update the information. We don't have an invoice or a purchase order per se, so we're going to ignore that. We're not given any terms. Post reference is going to be General Journal number 4. No terms, no discount, and no due date. Okay, because this is where we had to go to the in-store, and this is where we pretty much went to go pick up the flyers or order it. We ordered it in store. So you're supposed to get a semi receipt since we made a payment. We made a prepayment. However, in this case, I don't have any. Okay. So my due date, obviously, it's going to be whenever they call us and say your flyers are ready, right? Prepaid amounts. Okay, so we remember we understood that when we're making a prepaid amount, we don't apply it here just yet. We wait till we receive the bill and then we apply it. So in this case, my invoice amount is going to be $50 and my payment, because I paid with a Visa credit card, therefore my payment should reflect 0, right? It's going to be my amount that I owe minus any prepaid, minus any returns, minus any discounts, minus any payments. So in this case, my amount that I owe to the city printers is 0. Okay. So now we could go back and look at the next transaction. So here, what do we receive? What kind of items did we receive?
Coffee.
Okay, and what do
Regular
these...
and supreme coffee.
All right, so what do these coffees stand for? What kind of asset or what kind of expense are they?
Operating?
Not operating. Let's look at the very top part again. So what do we know about each coffee that we bought?
Moving average and FIFO?
So what does that tell us?
First in, first out.
What kind of items did we buy?
Inventory?
We bought inventory. Okay? Now, specifically, what kind of inventory tracking method are we using?
For the regular coffee, moving, and then for the supreme coffee, FIFO, and they're both perpetual.
Okay, so tracking means perpetual. Costing means we're doing moving average and FIFO. Okay, so that means, okay, so now that we're dealing with perpetual inventory, how do we journalize this? How do we journalize perpetual inventory?
You get the average cost. So there's no change of the cost right now because it's only one item. Same item, so the cost would be 135.
We're not even on the inventory worksheet right now. We're focusing on just journalizing.
Oh, really? Sorry. When did
We're
you
gonna journalize and say coffee and then accounts payable.
We have a coffee accounts payable.
Well, I'm saying what I'm looking at for perpetual,
Mhm.
we would say coffee for debit and then accounts payable for credit.
Perfect. Now, what is our exact inventory item accounts going to be?
Regular coffee and supreme coffee.
Correct. So with this case right here, because we're dealing with perpetual inventory, we're putting everything straight into inventory. So in this case, we do have a regular coffee and we do have a supreme coffee. Can someone tell me what those accounts are?
12020 for the regular?
Hold on, regular coffee. What was it? 12020?
Yeah,
And then what was my supreme coffee?
12040.
12040. And yes, you are correct there. It is going to be for the accounts payable. Okay. Now, before we move on, let's go ahead and confirm that we actually received our inventory items in our purchase orders. Okay. So purchase orders. We received our 250 pounds of coffee, and the invoice number is 315. Okay, so yay, we finally got it, and it's validated that we received it. Okay. Now we are here. What was our original invoice? I'm sorry, not that. How much are we actually going to be charging each account since they're separate, right? We need to make sure that we have a section for regular coffee and a section for supreme coffee. So what is my amount going to be?
168.75 for the regular
Mm-hmm.
and 193.75 for the supreme.
All right, 168.75 and 193.75 to give us a grand total of,
362.50.
yes, 362.50 is going to be our grand total of coffee here. Now, I'm going to also indicate that in my description that I received. This is from Atlas Coffee, right? Atlas Coffee Imports. Okay, and this is for my invoice number 315. All right, and I'm gonna go ahead and throw in my terms just so then I can have an idea. So what is my terms going to be?
1%, 15.
1%, 15,
Net 30.
net 30. All right. Oops. Okay. I copied and pasted my message. So here, net 30. Okay. Good. So with this piece of information here, let's go ahead and journalize this post it to our ledger. So here we have coffee. Our inventory items is going to be under assets, under inventory. So I believe this is page 7. I'll go ahead and confirm if this is page 7. Okay, so office supplies, Supreme Coffee. Okay. This is on page 8. So regular is on page 7, Supreme, or actually the bottom of page 6, and then we have Supreme on page 8. Okay, so let's go ahead and place it into our to our ledger under assets. Okay, so here I am way off. So scroll up until I find my inventory, which is right here. So my regular coffee, right? I'm going to go ahead and enter it in here for June 12. Okay. In my items here, I'm going to note that I have 125 pounds of coffee. Okay. Post reference is going to be my general journal number 4. And my debit account is going to be for 168.75. So this is going to be my beginning balance in my normal. That's my beginning is going to be my actual amount that I start with. Okay. Then I'm going to go down to my Supreme Coffee. which is the next one. And I'm also going to enter in June 12th, another 125 pounds. All right, General Journal number 4. Actually, I'm going to be more specific. I'm going to actually say purchased 125 pounds. And it was for $193.75, which is going to be the start of my beginning balance. Okay. So I'm going to go ahead and go back up and fix this right here and indicate I purchased 125. So per okay, 125 pounds. Okay. And then the last thing I'm going to enter in here is going to be my accounts payable account. So that should be page 17 in your ledger. So let me see. Accounts payable. Since we just placed this on an accounts payable, it's going to be June 12th. Invoice number 315. Okay. General Journal number 4. And because we're increasing the amount of debt that we owe, we're going to increase it by the $362.50, making us our new total account to balance to be $14,765.89. Okay. All right, so I'll give you guys a couple seconds to catch up. Okay. So the next thing that we have to do is we have to go to our subsidiary ledger. We need to make sure that we place our information in the subsidiary ledger in case something were to happen, whether we had a returns. We do have a discount period, so if we pay in within the discount period, at least we know. Okay. So this should be page 3, or it could be page 4. I'm pretty sure it's page 3 of your subsidiary ledger. Okay, because Atlas Coffee is going to be the second entry on that page. So Atlas Coffee, here we are. Okay. Same thing, date is June 12th. Now here we're gonna write notes that we received 25 pounds coffee. All right. So here the invoice number was 315. All right. Our post reference is going to be General Journal 4. Terms. Were we given terms?
Yeah.
Yes, we were. It was 1%, 15, net 30. Okay. And with that being given to us like this, all right, when is going to be our discount date or the last day to receive the discount?
27.
Let me see. Yes, the 27th of June is the last time we can receive the discount. All right. If not, when is the actual due date?
July 12.
Yes, July 12th is going to be our actual due date for the entire amount, right? We didn't pay anything advance for it. But what was our bill what was our bill amount? $362.50, right? And of course, we made no payments to it because we're going to owe it. So what this is going to be is if we take the invoice amount minus any prepaid, minus any returns and allowances, minus any discounts, and minus any payments, we owe Atlas Coffee $362.50, which if we put our calculation at the very bottom, which is the equal sum, that's how you know that you owe this vendor completely is amount of $362.50. Okay. Then, if you guys don't have it already, we also need to update our inventory. Okay, we need to update our inventory worksheet. So, by looking at your inventory worksheet, you should have a section for regular coffee and a section for supreme coffee. So with this information, I've already filled out the table for you. So all you need to really know is when you're dealing with your regular coffee, you have it costing at moving average, okay? So in this case, go ahead and fill in the information here. So for what we know is that on June 12th, right, we could skip our cost of goods sold section. We know, let me make this a little bigger so you guys can see. We know that we received a total of $125 worth of regular coffee. And each one was $1.35. $1.30. I'm gonna look at my invoice again.
35.
Okay, so I was right. So $1.35. Okay. Making our total purchases to be a total of $168.75. Now, hold off because the next transaction is we're going to be dealing with the shipping. So we can leave it as is for now right here. We're also going to update our Supreme Coffee because we've also received it. A little bigger. All right. So we obviously know that it's going to be FIFO, but let's go ahead and type in our information. So June 12th, we know that we purchased 125 at $1.55 to get us a grand total of 193.75. Okay. And again, we're leaving our freight expense alone and we will actually complete it once we fill in our freight. Okay. So any questions on how to fill out that little inventory worksheet?
No, ma'am.
Okay. So now that we've completed our transaction here for having our inventory, right? Now the next thing that we're going to be looking at is going to be the actual freight charge. So here it says here that this was shipped from Mr. Atlas Coffee right here, importers, right? They decided to use a third-party vendor, which is called Freightline, to send out our coffee to our store. Now with this bill, let's look at this invoice. What is significant about this invoice? It is cash on delivery, meaning we gotta write a check. Okay? And it's going to be for the total amount of $62.50. Now, if you guys understand shipping, you know it's based on weight. So how am I going to divide this amongst the regular coffee and the Supreme coffee?
Equal.
Equal. Exactly. Exactly. So that's what we're going to do. We're going to divide this by in half, and we're going to place it into regular coffee and Supreme coffee, because what we're dealing with perpetual inventory, correct? The concept with perpetual inventory is that everything goes straight into inventory. So including any shipping, including any importing taxes, any sales tax, all of it's just going to go straight into inventory. And what we're going to do is, because we know that this actually belongs to the regular coffee and the Supreme coffee, right? This is technically our freight right here. So we calculate the freight by entering it into the actual inventory item and dividing it in half. And we paid with cash on delivery, meaning we're going to write another check. So back to the journal. Okay, so June 12th, June 12th, June 12th. Okay, again, because this is related to our inventory item, it's considered freight. We're going to place it right directly into the inventory item. And of course, we paid cash on delivery, so we wrote a check. Okay. So again, this is 12/0/20, 12/0/20, 12/0/40, and my checking account is 10/100. So here we already said that we're going to take 62.50 and we're going to divide it in half. So 62.50 is going to be what I am paying for, and how much my 31.25. Good. We just divide it in half. Okay. And I'm going to go ahead and first things first, we got to go ahead and write our check first. So go to your check register. Okay. Wow, okay, so let's go ahead and write that check. Okay, for $62.50. And who is my vendor that I am writing this check out to? Freight line. And it's check 1512, just to make sure that our journal matches our check register. So we wrote the check out for 1512. Okay. So I'm going to go back to my little journal and I'm going to finish up my description. All right. So this was to Freightline. Okay. We have the invoice number. Invoice number 482. 482. And we wrote a check number 1512. Okay. So now we completed our journal. So next thing that we got to do is go to our ledger. Okay, our general ledger. So again, because we're going to be dealing with our regular and Supreme coffee, you should be on page 6 and page 8 for Supreme coffee. Under your assets. So my regular coffee, okay, I'm going to go ahead and indicate that it's June 12th, right? And this is where I'm going to type in freight. freight cost. Okay. Because at the end of the day, what am I going to do? I'm going to add them together. So it was for the amount of $31.25. So this is where I'm going to add my inventory amounts together. So here I'm going to go up one because I'm taking my previous balance. I'm going to add any debits and I'm going to subtract any credits to get me a new running balance of $200. There you go. So that means my balance should be for right now in my regular coffee is for $200. Okay. And then I'm going to go ahead and go to my Supreme Coffee. And I'm also going to enter in freight cost, General Journal number 4, and we're going to add another $31.25 to my Supreme Coffee. Apply that same exact formula. We're going to go up one to get the current balance. We're going to add any debits and we're going to subtract any credits to give us a new running balance of $225. Right? There you go. And then the last thing that we need to do is we need to actually go back all the way up to our checking account, which is on page 1. All right, and we are going to for 6/12, right? We're going to indicate that we wrote a check out. So check number 1512, okay? General Journal number 4, and that we recognize that we credited another $62.50, which brings up which brings down our balance to $5,689.92. Okay, so I'll give you guys a couple seconds to finish up. Okay. So now what I'm going to do is I'm going to go straight to my subsidiary ledger first, just so then I can update my vendor, and then I will go to my inventory worksheet to go ahead and figure out what my cost is going to be. So I'm going to go to my subsidiary ledger. I'm going to go to my vendors list, and I am going to find freight line. Okay, here it is, freight line. I'm going to go ahead and write that we received it on June 12th. And here in my description, I'm just going to write 250 pounds coffee. All right. And I'm also going to indicate here that I wrote a check 1512. So I made the payment, and this is my notes that I'm going to indicate here. My invoice number was 486. Is it 486 or 482? Oh, 482. Okay. Post reference again is going to be General Journal number 4. And did I get any terms, discounts, or any due dates? No, but you do need to indicate that this was COD. Right? Of course, there's no prepaid amounts, and the amount due was $62.50 because we did make a payment of the $62.50. Therefore, by putting in the formula again, under accounts payable, right, you're going to take your invoice amount minus your prepaid, minus your returns, minus discounts, minus payment. We owe them nothing. Okay. For $62.50, invoice number 482. Okay. Now that I've finally finished my subsidiary ledger, now I can go ahead and plug in my information in my inventory worksheet. So in here, I'm going to go back to my regular coffee. Since it's the same day, we don't need to make another extra entry. We can go ahead and just type it in right away. So, or in the same line. So by adding $31.25, what is our total cost going to be? $200 even. And how do I solve for my cost per item?
This is a moving expense, so it's going to be the same.
What do you mean it's going to be the same?
I'm trying to recall the formula. But it's not. 200 divided by 125. 160.
Divided by 125 gives you 160. And because this is moving average, well, let's go ahead and double confirm. Did it go in evenly? Yes, it did. Okay, so because we are utilizing perpetual inventory, go ahead and move it directly into the inventory on hand. So right now I currently have 125, right? 125 items and costing me $1.60, which should give me a grand total of $200. Okay. And when we actually open up shop and start selling in our items, it's going to be really cool on how we actually have to calculate this. So there is your inventory worksheet for regular coffee. Now we're going to go into Supreme and do the same thing. So we're going to add our $31.25 of freight. We're going to get a grand total cost of $225. Okay. So what's my cost per item going to be? $1.80 even?
Yep.
Okay. So we're going to take our 225 and we're going to divide it by 125 to get us $1.80. And same thing, because we are doing perpetual inventory, go ahead and move it across into the inventory on hand. So we know we have 125 items available. We know it's going to cost me $1.80, and we know that the total cost is going to be $225 as of right now. Okay, $225. All right. So let's save this inventory worksheet and see what has happened next. So So as you can see, there is a trend that we are doing, right? We're moving from journal to ledger to subsidiary ledger and then to any other worksheet that applies afterwards, okay? What you can do is you can utilize your inventory worksheet first to solve for what you need to solve for and then calculate it. And once you've calculated, then put it into your journal. And that's what we will be looking at when we're dealing with our cost of goods sold, when we actually sell our items. That's what we will be doing because it makes no sense to have to calculate it twice. Okay? But we're just making our purchases. We just received our inventory, so we can just go ahead and utilize the inventory worksheet last. Okay? Now that we've received our inventory items, okay, what has happened on the 13th of June?
Hire Silver State Electrical to upgrade electrical wiring.
Okay, so for our coffee grinder, right?
Yes.
So with that being said, do we need to record this transaction?
No.
No. We're just hiring. No bill was sent. No contract was made. So in this case, we just hired somebody. They're going to do a job for us. They're going to bill us. Okay. All right. So what else happened on the 13th of June?
Received a bill from LV Remodeling Company for
Mm-hmm.
reinforcing foundation to the amount of 1,560.
Mm-hmm.
Invoice 1760,
Mm-hmm.
and it's due in 4 days.
Okay. Now, because we know that this foundation was meant for my coffee grinder. As of right now, where is my coffee grinder? Where is my coffee grinder?
Miscellaneous suspense.
Correct. Yes, it's in miscellaneous suspense right now. We didn't move it out yet because we have a few more things that we need to calculate as our grand total for the coffee grinder, right? We just hired Silver State Electrical to complete the electrical wiring for the grinder. And now we just received our we just received our bill for the remodeling of the foundation. So with that, I'm going to place it into miscellaneous suspense because that is exactly where it belongs to. All right? So, by looking at this, what am I going to put in my journal?
Miscellaneous suspense.
Exactly, miscellaneous expense. And am I paying them now?
No, accounts payable.
No, we're going to owe them later. So miscellaneous expense, okay, we know that's 19,990. Okay. And we know that we're going to place this on an accounts payable. We're not going to pay it now. We are going to pay them later. For 20,000. Okay. So what is my total bill going to be?
1560.
Mm-hmm. 1560 on both sides. And I'm going to go ahead and complete my journal here since I'm already going to just not pay yet. So things I'm going to place in here is going to be LV Remodeling, right? That's the company that we are dealing with. Okay. We did not see, okay, was there an invoice number? Yes.
Yes.
Invoice number 1760. Good. And What do we know? When is it the whole entire thing due?
4 days.
Net 4. We'll figure that part out in the subsidiary ledger. Okay, so there, I've completed my transaction, and it's going to be a miscellaneous expense, and it's going to be on the accounts payable account. So I am going to go to my ledger now. Let's see, find it. So my ledger. So this is going to be page 16 and 17. Let me double confirm that with you guys. So miscellaneous suspense is the very, 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 very last account in assets. So for miscellaneous suspense, it's going to be page 16, and then right after it or right under it, it's going to be page 17 for your accounts payable. Okay. So with that being said, I'm going to go to my assets, which is the very last table in there. Okay. Okay, so miscellaneous suspense. Okay, so I'm going to go ahead and add in the 13th. We know that we received an invoice, but I'm going to go ahead and write, invoice number 1760, and I'm going to write foundation, right? Foundation, okay? And general journal number 4, right? And did we increase our miscellaneous suspense? And we did. So 1560 is going to be increased, which should bring my running balance to increase to $3,088.07. Okay. So my coffee grinder now currently exists at $3,088.07. Okay. And because we are placing it on an account, so we're going to go to accounts payable. It's June 13. Okay. We are also going to write invoice number 1760. We know that's from general journal number 4. And because we're increasing our amount that we owe 1560. That's going to increase my accounts payable from 14,000 all the way up to 16,325 and 89 cents. So we're owing a little too much here. Okay, so I'll give you guys a couple seconds to catch up. Okay. So now that we've updated our ledger, okay, we need to go ahead and go straight to our subsidiary ledger. Okay. And we're going to find our LV remodeling client, right? Our vendor. So LV remodeling, here they are. Okay. We know it's going to be for June 13. And we're since my notes is going to be foundation for coffee grinder. We do have an invoice number 1760. we do have a post reference, which is the general journal number 4. And we know that's going to be for net 4 because it's expected to be due in 4 days. Okay. They didn't give us a discount, but however, when is this bill going to be due? 17, right? So June 17 is going to be when our bill is going to be due, right? And the invoice amount was for $15.60. And if you apply this formula, because we haven't paid them yet, we owe another $15.60, bringing us a grand total of owing LV Remodeling $3,450. Okay. So we have 2 bills with LV Remodeling. We gotta pay. We're gonna start paying the remodeling pretty soon because we're on the 13th of June. We gotta make sure that we get the payment in. Okay. Let me go ahead and see what's next. Okay, so go ahead and let's do the next one and then we'll pause here and come back to the 14th of June. All right, so what was the last transaction that happened on the 13th of June?
We pick up the advertising flyers from the city printer.
Mm-hmm.
Total bill for 100 minus a down payment that was originally input there was $50. So we owe $50 to be payable with the to pay with the credit card.
Where are you looking at? Oh, okay. I said what was before.
Oh, before the
Yeah.
I'm sorry.
No worries, because we're gonna come back and do this one. Okay. So what's the last thing that happened on 13th of June?
Contract with Higher Temps, a temporary help agency
Mm-hmm.
for one person to work 8 hours per day
Mm-hmm.
from the 17th to the 19th of June at 10.50 per hour, and payment due is June 21st.
Okay. So is this a transaction that we need to calculate?
Not right now.
Okay.
We can input that only once you pay.
Correct. We only need to place this journal in the day that we're going to pay. However, this is crucial information just so that you are aware that you did go to Higher Temps. You did pay for one person to work a total of 8 hours, and they're starting from the 17th through the 19th. Okay? And you're paying them at $10.50. Okay? And you pay them on the 21st of June. So with that being said, let's go ahead and stop and take a break here. Right now, I'll call it so right now it's exactly 10 o'clock. So go ahead and take a 15-minute break. So be back by 10:15.